All right, so for this video, I wanted to talk about making estimated tax payments and recording them in TurboTax, but specifically, we want to look at how we apply a current year tax refund to the subsequent year estimated tax payment amounts. So in TurboTax, we do have the example that we've been working with previously. This is John Q. Taxpayer. Right now, he's showing he's getting a refund of about $5,000. And so, what we want to look at is the rules around when we might want to not get that money back, when we would just want to apply that to our next year's estimated tax payments. So, many taxpayers have to make estimated quarterly payments. And these are generally required when you are going to anticipate owing money at the end of the year, right? So, who has to pay estimated taxes? Well, the IRS rules, if you go look at their website, individuals that expect to owe more than $1,000 when they file their tax return should be making estimated tax payments. Now, there are certain exclusions, right? If you have a salary job somewhere and your employer is taking federal withholding out, then that's fine. But most taxpayers that have small businesses or a lot of investment income find themselves in this realm where they will owe money that is not subject to withholding tax, and so they have to make estimated payments or a large payment at the end of the year. Now, in some cases, and we have a lot of clients like this where they're okay with paying the interest and the underpayment penalties, right? So if you don't make the estimated payments and then you file your return, the IRS charges you interest. They might charge you underpayment penalties because you didn't make the required quarterly payments. And the taxpayer's perspective is, well, who cares, right? I'm happy to pay the tax plus the underpayment penalties and interest because I'd rather keep my money throughout the year anyway. And the rates are low, so, not a big deal. But if you're not in that camp, right, if you want to make the payments to avoid those additional charges, then you should be making estimated payments. Now, the payments are made via Form 1040-ES, so you can send these vouchers in, or you can make the payments online. Now, what to do if you have a refund for the current year, which is our taxpayer here, John, and you decide, well, I know I'm going to owe some money, so why don't I just roll it forward, right? So in our example here, we have John Q. Taxpayer has a refund for 2022. So he's got a $5,000 refund, but he knows that during the 2023 calendar year, that tax year, he's going to be selling some assets, right? So stocks, bonds, maybe investment property, whatever it might be. And he's going to have some large capital gains. Well, John, as a U.S. taxpayer, generally there's not going to be any withholding tax on those gains, right? So he's the one responsible for making any estimated payments. Now, because he knows he's going to owe, he decides, well, even though I got a refund for this year, why don't we just go ahead and roll that into the next period? I'll apply it to my 2023 taxes, and then I'll be done with it. So if you find that you're in a similar fact pattern or position to John here, then you might want to go ahead and enter these changes in a TurboTax so you actually roll your tax refund. So let's go ahead and look at TurboTax and see how we enter this information. So we're working with the TurboTax self-employed version for 2022. And so if you are looking at the left-hand side, if you scroll down to the Other Tax Situations field, this is where we'll be able to find where to change the tax refund, right? So in the additional tax payments section, we have a federal refund of $5,086. So if we drop down here, there is an option to apply refund to next year, right? That's what we want to be working with here. So if we click on this start button, it asks us here, okay, so if you're planning to pay estimated taxes for 2023, and that's us, there are ways we can handle your 2022 tax refund. Now, you have the option to apply all or just part of it, or get the entire refund now. And so what we want to be doing here is just apply all of it. So again, you could make the option to apply, let's say $4,000 and get 1,086 back. You can roll the entire amount. Totally up to you, right? There's no legal obligation for you to apply your refund to the subsequent year. We are making this voluntary choice. So we are going to apply all or part of it to the next year's tax bill. So the amount that we're going to apply to next year is going to be the full amount. We don't care. Let's just do the full 5,086 because again, we're anticipating some large gains, so we're going to owe this money anyway. So here's the breakdown of the changes, right? The refund available was 5,086. The amount that we're rolling forward to next year is 5,086, and so the refund that we get back this year is $0, so nothing. Now, really important to keep in mind, this is still your money. In other words, you were entitled to take this. So it's not as if you're kind of losing out. What you're doing is you're just saying to the IRS, look, keep this $5,000 because I'd rather you just keep it rather than me make a separate payment because I know I have to make estimated payments anyway. Okay, so you're not losing out on the money here, right? Very, very important that taxpayers maintain some perspective on this issue. All you're doing is applying that amount to next year. If something happens and you don't have those gains or if you have losses, you can get that money back, right? You can just apply that as a credit to the next year. You'll get the money back anyway, so it's kind of a moot issue. All right, so now that we are through that screen, it has just brought us back to the other tax question screen. So let's go look at the return itself. In the previous videos you've noted I like to do this. We like to actually look at the return and see what the printout looks like now that we made the changes. So we're going to preview the return and I'm going to show you what has changed here on page 2 of the tax return. So page 1 of the return, the 2022 return for John. Again, we have his income information here, investment income, all the other adjustments to income, his AGI, his taxable income. Where you see the changes now are down here in lines 34 through 36. So the refund, the initial amount that was going to be refunded to John, $5,086. Now, if John didn't do anything, that same amount will be reported here on line 35A. So this is the amount of line 34 you want refunded to you. So the actual amount of cash the IRS is going to send you. In our case here, what we've done instead is reported 0. We don't want any back. And we've reported the full amount on line 36 as the amount of line 34 that we want applied to the 2023 estimated taxes. Okay, so that's really important. So now we're saying we don't want any money back, roll everything to next year. And so on next year's return, what you'll see is John will have up here on line 26, see on line 26 where it says estimated tax payments and amount applied from 2021 or the prior year return. That's where we'll see this 5,086 number. So on next year's return, the 5,086 will be an amount applied from the prior year return. So John will ultimately get credit for this amount. We're just saying, look, don't send us the cash now, just keep it because we know we're going to have to make the payments anyway. All right, so I hope that was helpful. If you have any questions about estimated tax payments or refund roll forwards, feel free to leave me a comment below. Happy to answer any questions I can. And I look forward to seeing you again on the next video. Thank you.